No. In this video, we are going to talk about the AMC Squeeze, and is the squeeze squoze? I'm going to give full details on this, but I'm going to start by talking about a GME, because it is very important that you look at previous companies and trades, especially momentum-related trades, to get an understanding of how short squeezes can work. So first, we are all extremely familiar with the GameStop short squeeze. In fact, we may have met during the GameStop short squeeze. If we did, leave a comment down below. But folks, take a look at this. We went from a massive short interest of around 150% to a massive squeeze on GME on my birthday, January 28th. We covered this live all day long until the suits stopped us from being able to buy, preventing further gamma squeezing of the stock. This could have gone to $1,000, but it didn't because the suits stopped it from happening, which is very frustrating. But what I want you to understand is the pattern. Look at this. In fact, I'm going to go out to the year chart here. I'm going to hide myself for a moment. Take a look at the pattern. High short interest data. Now take this with a grain of salt, okay? This is S3 Partners. It is the black app. We understand that these are just estimates, okay? So take this with a grain of salt. But we do believe that GameStop was over 137% short. That is generally accepted going into January. On January 28th, we had this massive squeeze. That was round one of the squeeze. We sort of bled short interest for a few weeks after, leading into the last week of February. And then guess what we had? We had an inflection point, look at that, right here around Feb 23, 24, 25. We had an inflection point, and we had a second squeeze. This is very important. I want you to think of this like literally people going shopping for lemons. When life gives you lemons, you put them in your shopping cart and you wait for the squeeze. You put them in your shopping cart and picture it kind of like a bunch of people reaching down the shopping cart and go, GameStop, squeeze. Okay, you got some juice out of that one. It doesn't mean it's dry. In fact, sometimes lemons get even more juicy over time as the suits reload their shorts. And you can pick it up again and you go, oh, you've reloaded. Thank you very much. Squeeze again. Okay, squeezes, there's not one squeeze. Squeeze is not a singular. And this is very important because we always want to be very clear when we're talking and when we're listening and understanding what we believe is happening in the market. We should be very clear with what we're saying, and we should then reiterate what we believe we heard to confirm that what we heard is correct. And so when there are rumors going around suggesting Kevin said the squeeze is squoze, it's very important to realize that is not what I said regarding AMC. And again, we're going to continue this discussion by using GME as an example. So look at the chart here. Look at the chart. First, big squeeze, January 28th, massive inflection point in the short interest data to the downside. What did I say? Like literally February 23rd, 24th, 25th. You just saw it on the chart. Look at the pricing move up. This is your second squeeze. I kid you not. This is how this works. It is like a lemon that you squeeze over and over and over again. Period of consolidation, lemon gets juicy again. What happens? Another squeeze. I kid you not. There is no singular squeeze. Why do we know this? Looks pretty flat over here in this corner, right? Looks pretty flat, right? Go to the last 60 days. Look at the chart. Boom. See that decline? Inflection point squeeze. These are individual squeezes of the lemon. That does not mean the lemon is dry. That does not mean the game is over. That does not mean the lemon can't get juicy and refilled again. So we need to talk about AMC now that we understand this. This right here on this chart is an example of a squeeze. It is not necessarily the only squeeze. I don't believe that there is the squeeze. This is just an example of a squeeze. And so when we see short interest data go from 23 or 24% down to where we sit now around, we actually sat all the way down to 11% at one point, and this has been then revised up, then we know, well, wait a minute. Maybe that means we have more squeezes in the pipeline. In fact, let's look at some of the recent data. But first, I want you to see this. Take a look at AMC right here. AMC also had a run around January 28th. Right here. Look at this. January 25, right around the peak here. And then we fall and squeeze by the 28th and down into early February. It's the same thing. It's the same pattern. You can have multiple squeezes. In fact, go out here. Let's go to, we'll stick on the day chart, but let's go to AMC, go to the beginning of the year. All right. It's certainly not as prominent as what we've seen here, but when we zoom in over here, and you kind of forget for a moment that we're at $60 for AMC right now, or in the low 50, we're at $54 right now, but you know what I mean. Take a look at this. Going from $3, $4 to $20.36 at the same time, we have an inflection point down in short interest data is a form of a squeeze. But then AMC got juicy again. The lemon filled up and we got another squeeze. Now that does not mean that we're done. If anything, that means we have the potential of suits reloading their lemons again, because they do that. They're suits, okay? They, like, here's the thing. You gotta think human psychology, okay? People don't want to be wrong. Nobody wants to be wrong. I don't give a crap about being wrong. I admit I'm wrong all the freaking time. It doesn't matter. It doesn't freaking matter to me, because when I admit I'm wrong, I learn and I adapt. Unlike here, let's go here. Let's look at this. Financial Times, here it is. Actually, I have it saved right here. Boom. Unlike these folks, boom, right here. Hedge fund that bet against GameStop shuts down. That's right. They failed to admit they were wrong. They failed to adjust, and now they're closing their doors because they suck. And if you want to get in touch, they have a website that'll let you scroll down over here, and you could reach out to them to let them know how you feel. See? Look, you want info on being an investor? You want a career? Probably don't want a career. Especially since they're closing down. But the point is, this is their website, White Square Capital. Anyway, we'll leave them alone. So the point is, suits don't like being wrong. They would rather close down their fund and rebrand and come back as a new villain in the future, because you know that's all they're going to do. The suits have the potential to continue to reload their shorts. And guess, folks, what is happening? Look at the share utilization here. We're seeing more shares being utilized. We are seeing the short interest start ticking up. Look at this. Last week we were sitting around 11%. Previous reading here was 13.17%. Now it's 13.99%. So short interest is going up again. We are seeing utilization go up again. We are seeing a similar thing, I believe, here on the Black App estimate. Let me go into the last 60 days here and hide myself. It's slight, but you do see that slight increase here in short interest. 1334 based on the Black App. It's a very good idea to use multiple sources of data, Ortex, S3 partners, use other sources of data as well, especially if they do daily estimates. Okay, this is one thing that drives me nuts, is sometimes people go like, oh, you know, my friend went in the Bloomberg terminal and they saw the short interest was X. And I'm like, dude, you can't look at stuff that's 2 weeks old. You gotta use the day-to-day estimates, okay? So knowing what date a short interest reading is from, very, very important. You start Googling short interest and you get old readings, it could totally skew your investment thesis for a company. Now, when there are rumors suggesting, oh my gosh, Kevin said the squeeze, that's close. I hope you now understand that I'm not saying the squeeze is close. I'm saying lemons get squeezed multiple times. Going from 24 to 11 is a form of a squeeze, when at the same time the price goes from 15 to over 70. Okay, that is a form of a squeeze. That does not mean there's not going to be another one. And right now, it looks to me like the suits are gearing up for some more shorting, which is creating this downward pressure right now on AMC. I think that's why the share price is also down 2.5%. And I think they're just reloading. Now, I will say, there is a slight additional problem that we have, and that is called a reduction of volume. We need volume in a momentum stock to, guess what? Have momentum. Right now, we have a reduction in volume. This is not necessarily bad as long as it leads to some kind of potential breakout catalyst, which can happen. You could very easily get an uptick in short interest data even more than what we're seeing now, leading to a new and renewed interest in people investing in AMC. You see volume double or triple, boom, this thing skyrockets right back to $70 or $80. I watch AMC by the minute because it's very important that I keep an eye on my charts and my trades. Now, This right here, when you have volume declining, can sometimes be a symptom of a consolidation trend. We're not really seeing pricing break below our 51 support level, which is good. This is a very strong support level. I teach my support levels, my trading style in my Stocks and Psychology of Money program. We talk about this kind of stuff in my Stocks and Psychology of Money program. We talk about the lemons getting squeezed in my private live streams. We talk about how there are multiple squeezes. Our world is not singular. We are in a plurality, or as some like to say, a simulation. Okay, so it's very, very important to know that there's much, much more nuance that comes to investing. You want to see how nuanced investing can get? Here's just a very, very simple example, and it's a very important lesson for you to listen in on, okay? So I made this video about how crypto mining can be very, very good for using energy that wouldn't otherwise get used, especially if you're using hydro in an area you're not otherwise using hydroelectric dams. Here I get a comment, hydroelectric dams slow the flow of water running through the turbines. Also, energy storage systems can store solar and wind energy when there is a surplus of energy. There is no lost energy opportunity. Crypto energy usage simply siphons energy from the grid, period. So this is this particular person's argument. And then this person over here says that, by the way, electricity can easily be transmitted over large distances. So here's the thing. Maybe it's because I'm running for governor in California, but nuance freaking matters. I'm tired of just broad statements without nuance. So my reply, this is actually much more complicated than it appears. First, utility scale batteries are nowhere near cost parity. Solar and wind themselves are at cost parity with natural gas, which means using solar and wind is good. But once you include utility scale batteries, we're nowhere even close to that yet. Therefore, storing solar and wind energy when there is a surplus is therefore not as easy as you describe. Not yet, at least. This is the ambition, though, obviously. Also, to the other comment who mentioned that transmission lines are easy. Not quite either. Transmission lines come with their own environmental challenges, as well as lawsuits from folks who do not want transmission lines running through their neighborhoods or whatever, their counties or regions or whatever. They're also expensive to build. Additionally, slowing water flow for hydro in an area that doesn't otherwise rely on the water does not necessarily make a difference. So all of a sudden, when folks are very, very narrowly focused on one thing, you kind of forget that life and investing is a whole lot more complicated than a binary on and off switch. Keep that in mind. If you want to learn more about not being binary, check out my amazing programs linked down below. Use the 40% off coupon code. I'd love to see you there. Thanks for watching.